Hello everyone, welcome to the Lord of the Coins. Today we'll be going over the third part in our series of mastering price action. Mastering price action will allow you to understand how the market moves, while giving you a really good feel for its ebb and flow. This knowledge will help you easily identify areas of interest so that you may accurately and precisely plan your own trades. The concepts that I'm about to teach you is exactly how I managed to have over an 80% win rate trading the markets. But before we get started, I want to give a quick shout out to my Discord, as the document for mastering price action is available here, absolutely free, alongside a great community of like-minded people. I also do real-time trade callouts, just like these. We do 1 to 10k challenges, daily market updates, and more. So make sure to join and check it out. The third part in our series is order blocks. Order blocks are just areas of high supply or demand. But to understand order blocks, you first need to understand the concept of supply and demand. This is because the law of supply and demand literally dictates the price of anything. So price always wants to be in equilibrium and always will readjust to reach it. This chart illustrates equal supply and demand where the cost is the perfect price and the quantity for buyers and sellers. As you can see, where the supply and demand line cross is where the equilibrium price is and where the equilibrium quantity is. We'll go over some other examples. So, in the example of Bitcoin, there's only 21 million Bitcoin that will ever exist. There's less if you include loss of keys and wallets and even sending to the wrong address. So if there are only 21 million and the supply is finite and the demand is high, and just say the demand keeps on increasing as well, then the price will go up. This chart illustrates that. As you can see, the supply line has been shifted to the left. This means there is less supply. For example, just say this is 21 million supply of Bitcoin, and the demand stays constant. If that's true, then the price is all the way up here, the equilibrium price, where the quantity is all the way down here, lower. Alternatively, if there was an abundance of Bitcoin, just say Bitcoin, you could print it infinitely, and everyone still relatively wants Bitcoin, then the price will decrease due to the higher supply. This is what inflation is. So this chart illustrates as supply is shifted left, shifted right, and the demand stays the same, you can see that equilibrium price now has dropped all the way down here, but the quantity has shifted all the way from the left all the way to the right, so there's a lot of quantity, but the price is low. So these are some fairly basic illustrations of supply and demand. So pretty much if anything has supply and demand, then it has a price. This is pretty much law. And order blocks, simply put, are just areas of high supply or demand. So we'll go over some examples of order blocks as well. So we'll go over some examples of structural order blocks. So there are two types of order blocks, bearish and bullish. And bearish order block is area of high supply, and a bullish order block is area of high demand. Order blocks are identified by large moves from a particular area. As price reaches a zone of high supply, sellers overpower buyers, driving the price down. As you can see, as price moved up, if it hits a bearish order block, you'll see a large movement down. Alternatively, bullish order blocks are areas of high demand, where buyers overpower sellers, driving the price up. As you can see, as price went down and hit an order block, it'll go straight up. So order blocks can pretty much be looked at as shifts in momentum. Once price hits an order block, the momentum changes in the opposite direction. So why use order blocks? Institutions and banks trade on these order blocks. This is because their orders consist of very high volume. Therefore, when they place their order within an order block, they must break up their order into several smaller orders within the block. Otherwise, their entire order will never get filled. This is why you will sometimes see multiple taps into an order block. The first tap being a larger wick, price retraces the wick to completely fill the order placed by smart money. Also, institutions don't lose. That's why you want to use order blocks and trade with institutions and banks. They just don't lose, unless they short GameStop. Many people have different perspectives on order blocks, and I'll give you mine. We will now go over my rules to identify order blocks on real charts. As you can see here, this is the last candle before this large move. This is your daily order block. And the reason you want to choose order blocks on the daily is because this is where institutions like to trade on. Since they move so much money around, they have to trade on a higher time frame. With that said, order blocks are still valid on lower time frames, but I prefer to use them on higher time frames and just use them to swing trade. So order blocks can be up to four candles before a large move up or a large move down. In this case, it can only be one, as they have to be in a row if you want to choose multiple order blocks. So since this red candle is the last one down and it's the only one, as you can see, to the left of it is a green candle and to the right of it is another green candle, this is your daily order block. And another way to confirm this order block is that you need a change of character and a sweep and a break of structure. So as you can see up here, we have a change of character. On top of that, we have our sweep. Then we take this swing low and we have our break of structure. With this, we can identify an order block. So this is an example of me identifying one. As you can see, before this large move down, we have a change of character, a sweep, and we have this break of structure. This means we can confirm this last daily candle as our order block. And this would be our bearish order block. Here we have this bullish order block, and we see that this bullish order block has been tapped into. Once right here, and another one right here. And another way to confirm a tap into an order block is the same way, a sweep and a change of character. The reason this wick is so large is because the orders placed by institutions and retail, just all the orders did not get filled and the price bounced real hard. So since all the institutions' orders did not get filled, they bring the price back down to fill up all of their orders before they move back up. And where do they move it? They move it back up into their bearish order block, right here. And as you can see, it can be up to 4 candles. And right here, we have 3 up candles right here, and I chose to highlight all 3 of them since they're pretty much in the same area. They cover pretty much the same height. Therefore, this is my bearish order block. And as you can see, it has tapped right in. And another way to confirm it is to go on a lower time frame. So I went down to the 1 hour time frame to see the sweep and change of character. So if you zoomed into this area on the 1 hour, this is what the structure looks like. We have our sweep and change of character, which means we have a reversal. So once we have this reversal in this bearish order block, if you wanted to take a trade, you can place your stop right above the order block and place your entry on this retrace after the sweep and change of character and enter in right here. That would be a way to take this trade. These are examples of order blocks on Tesla. As you can see, we have a bullish order block right here. Since there are so many orders from not only institutions but retail, this is a great stock to swing trade. That's why retail has been really into Tesla as well. But as you can see, there are multiple taps into this order block, which means there are a lot of orders here. Every time it touches into this order block, you'll see large moves up. The thing is, make sure to note that this is not support. Remember, support and resistance theory is just liquidity. That means, and what I mean by that is that if we take this area down here, there's a lot of stop losses, stop losses, stop losses, and stop losses right here. With that said, these equal lows are probably likely to get swept sometime or another. So make sure not to rely on this as support and resistance, but view it as order blocks and liquidity. But as you can see, we tap in and then another tap in due to probably a lot more institutional buying into Tesla. This is another order block tap into a bearish order block here after this large move down. And this is the last up candle for a large candle down. So this can be an order block, and if you wanted to consider this first one, a bearish order block, you could also do that. As you can see, it's pretty much the same thing. So you don't have to get these things exactly correct, just get the general zone. That's what order blocks are. They're just areas of high supply or high demand. So definitely make sure to note that they're not, exact numbers that price will bounce off of, but just general areas of very high supply or demand. We will go over one more example of order blocks. And this time we'll go over some order blocks that have failed. So for an order block to be successful, the candle must not wick past the order block. A lot of people have different views on this. Some people say the candle must not close below the halfway point of the order block, or the candle may not close below the order block. And some people say there should be no wicks past the order block, otherwise it is a failed order block. In my opinion, I think the safest bet is to say that there should be nothing going past an order block, whether it's a wick or a candle close. This is because if this is truly an order block, there needs to be enough orders that price just wicks past, or just, or not wicks past, but wicks up once it taps into an order block. Otherwise, there is a lack of volume and lack of buying or selling pressure, thus making it not a true order block. You can see here, we have all examples. We have a candle, or most examples, we have a candle close here below the halfway point. We also have a wick going down. And as you can see, it wasn't really a true order block. And if you use this as a confluence as an order block, you can see that it would have failed and price went down below it. This is a filled bullish order block. As you can see, there was a large wick right here. And if you look up here, we have our change of character and our sweep. This is on the 1 hour time frame. If you see the relatively equal highs right here, that you see right here, that gets swept on top of a change of character and a sweep, it's just a very high confirmation that there's an order block, as this pretty much signals a reversal. Sometimes, order block is completely filled on the first tap, therefore tricking retail investors into thinking this is a support or supply zone. So, now that the institutions have placed their orders and they have already sold, they will dump past this order block and choose a new order block, which was down here in this area. So once they chose this area, this order block became no longer valid, dumping past, and pretty much ruining the trades of a lot of retail investors here. So make sure to be very cognizant and not to only rely on order blocks, but to also rely on other strategies such as liquidity and market structure. We will go over all of these concepts that I use to set up my trades in this series, so make sure to keep in touch and make sure to watch the entire series, as it is very relevant information for trading. If you guys enjoyed the content, make sure to leave a like, subscribe, and ring the notification bell, and thanks for watching. See you guys next time.